You put it all together, what's the data telling us about the state of the economy? Joining us now is Michael Feroli, Chief U.S. Economist at JPMorgan, and Sam Stovall, CFRA Research Chief Investment Strategist. Guys, welcome. Mike, how do you read this CPI and the market's reaction to it? I wonder if we're being perhaps overly sanguine about it, whereas perhaps in April, the other direction.
Yeah, it's going in the wrong direction, that's for sure. I do think we're seeing some tariff price pass-through. Core goods inflation has accelerated over the past couple months, which is where you would expect to see that tariff price pass-through. So, you know, it does look like, as was mentioned earlier, the core PCE number, which is what the Fed focuses on, that's going to hang out pretty close to 3%, we think, when we look at both the CPI and the PPI together. So that's not a great story. On the other hand, I think there's clear evidence that the labor market is weakening, and that seems to be taking precedence in the Fed's thinking here. I'm not so worried about this morning's claims number. It seemed to be a lot concentrated in Texas, looked a little fluky. But last Friday, we did see an ongoing rise in the unemployment rate. And I think that's going to be, you know, the real story here, because if that really continues, of course, then the downward pressure on wages presumably would halt any worries we're going to have about inflation in, 6, 12 months from now.
Back to the broader market and the economy a bit here. What's your take on how durable this excitement in the market is, especially given perhaps a little bit of a baton handoff between the likes of NVIDIA and Oracle this week?
Well, John, I do think that this euphoria, or at least the bullish sentiment, is likely to continue. Certainly, we have seen that with the inflation numbers today, the Fed is probably not going to be cutting rates by 50 basis points in September. However, it did add another rate cut this year to 3 rather than our earlier expectation of 2. So I think that would be an encouragement. Also, when you look at the fact that we are seeing new all-time highs, not just here in the U.S., but also overseas, that is a confirming factor that tends to improve the average price performance 3 months out, as well as the frequency of advance, to the point where I think investors really are trying to find reasons to sell stocks when, in fact, that's probably what's going to continue to support and maybe even propel them.
Michael Feroli, I'm curious about the impact of these conditions on the working class consumer in Q4, which is going to be critical, and also the levels of inventory that might still be hanging around from the rush to get goods into the U.S. ahead of the expected tariffs. How do you expect that to play out?
Yeah, so I guess just picking up on the AI theme, I mean, we do expect that that's going to add about a half point to GDP growth just through all the CapEx that's happening because of that. How much that supports consumers, it depends. I mean, you mentioned working class consumers. You're going to tend to see, obviously, some of the wealth gains that we saw again this morning in the flow of funds report. That's going to really accrue to upper income consumers, not so much to lower income consumers. And then finally, I guess in inventories, we actually didn't see as much of a build in inventories as one might have expected, right? So a lot of that was really concentrated in pharma, that rush ahead in the spring of inventory building. So it's possible that as we go into the the holiday shopping season, some of these price pressures that we saw this morning will persist because of tighter inventories, thanks in part to what we're seeing with the tariffs.
Sam Stovall, in RH, we're going to get a little bit of a take, not certainly on the working class consumer with the furniture that expensive, but perhaps on the durability of the higher end consumer. How important is that segment of the economy to keeping the economy rolling and thus the market as well?
Well, I think it is important. The driver in that group has been Wayfair, but RH as well as Williams-Sonoma make up the home furnishings sub-industry within the S&P 1500. It has been a very strong performer over the last several weeks, and I think the indications are that with lower rates, with people remaining at home, they're looking to upgrade the inside, not the outside.